It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today, we're combing through the social media landscape as TikTok's future in the U.S. hangs in the balance. I'm here with Hamilton Capital Partners Chief Investment Officer Alonso Munoz. And it's good to see you, Alonso. Thanks for coming back.
Good to be back.
So let's talk about your buy first, and that is Meta. The stock's already been kind of a monster over the last year. It's up better than 60%. So let's talk about why you still like it and you think it has more upside. First of all, is how it's done financially. And indeed, it's been growing. So you think it's going to keep going?
Yeah, you bet. So it's up 4 or 5% today on the back of positive or better than expected CPI print from this morning. And so, there's a risk on rally. But for Meta specifically, when we look at the revenue, 2022 was a tough, brutal year for the stock. 23 was the year of efficiency, per Mark Zuckerberg. And then 24, we started to see sort of that re-acceleration of revenue growth, operating margin, and they have a lot of money on their balance sheet and in cash. So this is a company that investors can get excited about, not just the value of having a big company, but also that re-acceleration in growth.
Yeah, and I guess they're not entirely done with efficiency, right? There was just the announcement, the reporting yesterday that they were cutting something like 2% of their underperformers at the company. So I guess they're still working on that. Some of that cash that you talked about, they're putting it into AI.
That's right, and this is not new. We're seeing this across the board, mega cap or Mag 7 spending a lot of money building their AI infrastructure. For Meta specifically, I think in 2024, almost $40 billion that they're spending on AI. For 25, we expect that number to be 50 billion, if not more. And so this should continue that sort of gravy train of the company, accelerating growth, investing, and that should be returned hopefully as shareholder value over the next 3 to 5 years.
So how is it going to play out? And that, I guess that brings me to point number 3, product innovation. So how do you think we're going to see that AI and other types of innovation, make its way into those products?
Well, we know they're spending a lot of money on their large language models. Some of them are open source, and so startups, businesses can access those models and develop stuff for themselves. But one thing that we're watching are the Ray-Ban glasses, which are really interesting. It's hardware. Meta's developing that bridge between the software that they have, Meta AI, virtual assistants, and the hardware that you and I can wear as consumers on a day-to-day basis, and hopefully makes our lives a little bit easier.
Do you have a pair of the Ray-Bans?
I don't, but I saw them at a conference last week, and they were awesome. Very cool.
Yeah, I've seen them modeled too. And product innovation, I want to bring up TikTok here because we've seen Meta develop Reels on Instagram to kind of compete with TikTok. If TikTok does end up getting banned in the US, is that then an additional benefit for something like Reels?
I think it's two-sided. It's the user growth, the users that would shift over from the TikTok platform potentially to Meta, but also the ad revenue. I mean, $50 billion, I believe, of ad revenue is up for grabs, and Meta could be a beneficiary if, I think it's 4 or 5 days, if TikTok does get banned and there isn't a U.S. company that takes it over.
Yeah, January 19th is that deadline. What could go wrong for Meta, though? I mean, there are still a number of investigations going on into the company, right?
That's right. So this seems like an easy one to point out, but last year the European Commission fined them nearly $900 million for their Facebook marketplace, and it's just not something that's going away. I think we talked about the election a couple months ago, and with a new administration, we don't think that the FTC is going to pull back from these big tech companies from an antitrust standpoint. And so that's something that could eventually flow down to the financial statements and the bottom line.
That's interesting. You don't think they'll pull back on the investigation, even though Mark Zuckerberg is obviously courting some favor from the incoming administration.
Well, you can see the buddy-buddy action with the president and obviously the administration. I know he's going to be at the inauguration.
Yeah.
But it's something that, I don't think that they're going to, it's maybe some of it's posturing. We don't know. I think we'll wait and see how this plays out from a regulatory standpoint.
Yes, unpredictability, I think, is the name of the game. Let's talk about Snap. That is your good buy stock. And this stock is already down a lot over the past year, more than 25%. So we just were talking about competition. I don't know does TikTok going away change the calculus for something like Snap?
Well, a little bit, and it seems obvious to point out a smaller company like Snap versus a Meta. But a lot of investors are looking exactly for that, for a way to play on this TikTok ban. And obviously there's money that's going to flow. There are users that are going to flow. And so for us, we look at the competition that's out there, and it's hard for Snap, given their user base or their daily average user base, to compete against these big companies like Meta specifically.
So if TikTok goes away, you think more users will flow to something like the Meta platforms than they would potentially to Snap?
Well, we think so. And we've seen a bump in Snap stock over the last couple of days. I think it's up 6 or 7% today. And I think investors are front running that a little bit. At least the anticipation that if TikTok does get banned, those ad dollars are going to come and be spread out, and potentially Snap's a beneficiary as well as the user base.
But on the face of it, sort of excluding that effect, do you think the fundamentals of the stock are weak and the business are weak?
That's right. If we pop open the hood, if we look underneath the surface, it's a company that operates at a net loss. They're really digging themselves out of a hole. They don't have as many users as other big companies, and frankly, their user base are generally younger consumers that have less wallet share. From an ad spend standpoint. So when we look at the fundamentals, although the revenue has been improving, it's a company that has a lot of debt. It loses money, and we don't think that investors would want to put their money in a company like Snap.
And then the other side of the coin on innovation here, and it's funny, because Snap also attempted a glasses, spectacles specifically, that didn't work out so well for it, in contrast with the Ray-Bans that you were mentioning.
That's exactly right. The first generation, the second generation, I don't know if you've seen them, Julie, they're big, they're clunky. It's almost like a gag gift that you would get during the holidays. And so when we look at their product lineup and their services, this isn't a company that has the capital to invest in AI. They don't have the balance sheet to really drive growth at their business. And when we look at the innovation in their product pipeline, it's disappointing, frankly.
So what would change your mind on Snap?
Well, this is a company that if they can continue to grow their user base, if they can clean up their balance sheet, and management can do a good job of raising capital, this is a company that maybe is a turnaround play, as well as a TikTok. If TikTok truly is banned here in the States, they may be a beneficiary in the short run from that ban.
Do you have a position in either of these names?
We own Meta, we don't own Snap.
Gotcha. Okay. Well, thanks so much for being here. Good to see you again, Alonso. And thank you so much for watching Goodbye or Goodbye. We'll bring you new episodes at 3:30 p.m. Eastern.